All right. Good morning, everyone, and welcome back to the UK Live. Now it is about 3 a.m. Eastern Standard, 2 minutes past that. Uh, once again, a warm welcome, but I'm feeling a bit down, but we'll be continuing the session as scheduled. Uh, let's begin with the Euro USD chart setups. As we were talking about the wave structure or the wave counts last session, we were expecting euro to drop lower a bit actually towards 1670, but it has chosen to bounce right from the 38.2 Fibonacci support. So the overall structure still remains constructive for the bulls actually. The good part is that we could not enter, remain flat around until 1800 levels, but we just issued a short call around the 1800 mark with an aggressive label on it. Now the scenarios coming up at this point in time are as follows. First of all, the entire retracement, if we do take, is pointing towards 1975, which is a 786 resistance level up there. And if you now going to take the retracements or extension, of the counter trend that is matching up very well with 1977. The question now remains whether it's going to go straight from here, or is it still going to form a counter trend drop lower towards 1670. This would be the wave structure. $16.70, where the Fibonacci 61.8% is also coming up. Alright, let me check the stream. Actually, there was some disruption last time. Okay, it's fine right now. Alright, so with an anticipated move of a Gartley, actually a counter trend, we have issued an aggressive short. Yeah. All right, like that. Resistance or an interim resistance remain strong at around the 1860 mark. Remains to be seen whether bulls are able to take that out or not. Okay, but the overall structure on the daily chart for Euro USD still remains strong, in the sense that uh, we've got the first wave here and the second wave that remains as an extended third wave. Are we still working on a fourth wave? The answer would be yes, because the 38.2% retracement is still far away from where Euro has bottomed out. All probable chances remain for a drop towards or continued drop towards 1480 levels from here or from around 2000 levels. It could be building up a neat little structure in this sense. It rallies towards 1970 and then drops towards 1480 again. So we are pretty much clear about the longer term picture, but the short term picture remains a bit dicey. Whether we are going to see a continued rally from current levels, or we are going to see a neat little cartly forming towards dropping towards 1670 first and then rallying ahead. Alright, so an aggressive way to deal this chart was to go short, which we have done with a stop loss at a risk just about 1860 and short-term target of around 1670. We want to get out of that price. Another supporting factor could be the MACDs and the RSIs. Let's have a quick look there. I wouldn't say it's a perfect example of a bearish divergence, but it looks to be a case, right? Prices have not formed a new high, but that's why I'm saying it's not an ideal case of a bearish divergence. Even if it does though, and if it kicks out towards 61.8%, I think there would be an excellent case about bearish divergence in the making. So an aggressive way to deal in Euro USD is to remain short from these levels. The stop just about 1860.65, targeting 1670, right? And the conservative way would be to remain flat. Let's see how prices shape up in the next few hours, and then we'll take a call. Okay. So that was Euro USD. Let's go back on the. I think it was chart of the week, I would say, but it pipped us out yesterday around 1292, almost at the break-even levels. But believe it or not, the structure is still remaining constructive for bears actually. I'd like to give a quick wave count here. The drop from 1357 actually has developed into 5 waves presented here. That is also bringing probable wave 1, or I would label it as an A as well, because we are expecting a 3-wave corrective drop, A, B, C at least, if not a 5-wave drop, right? That leaves enough room for us to consider the recent top to be either wave B or 2 actually, and on the other hand wave B could actually go and terminate at a Fibonacci 61.8%. Which is around 1320. Now this normally it should not happen with the wave structure which has been developing since the rally from 260 towards 1306, and then the drop, and then the subsequent rally. The reason because it is all being 3 waves, if I'm not wrong. 3, another 3, and I still would consider this to be an ending diagonal structure, wave C, which is fallen short, putting it into the category of a running flat. So I I would still believe that till the time prices remain below 1297, broadly below 1306, worst come worst scenario, or as an alternate count, prices may retest somewhere around retest 1306 levels or maybe 1307. It makes no sense to place your stop loss somewhere higher at that resistance. We are considering 1306 as a strong resistance for now, and we like to remain stop just above that. Right, we'd like to take a case further from there, how it's shaping out, but for now, shorts should be taken around this price, around 1290.92, with a stop loss just about 1306, and we're expecting prices to drop lower below 1260 levels. All right. Please do not consider, this has to be a general declaration when we are discussing trades here, do not consider it as a personal solicitation or any personal benefit that we are discussing. It's a pure technical, based on a technical point of view that we are suggesting trades here. And personally, I'm also trading not all instruments, but at least gold, exactly what we do here, or what we are discussing here. All right. Let's move on to the dollar index deal now. This is something we have not discussed lately, but the structure is looking good actually on the 4-hour chart as well. Let's study the waves first. The boundary which is in consideration right now is between 91 and 95. That goes without saying. A very strong support just in the vicinity of the Fibonacci 61.8% is coming right across 92.80, and I would say 92.60, which is the Fibonacci 61.8%. Right. The Gartley structure that I was talking about is very much valid in the dollar index as well, but on the opposite side of euro. If I'm not wrong, this might go and extend itself towards the 92.60 mark. Okay, the Fibonacci 61.8%, as well as the past resistance becoming future support. So the wave structure indicates a clear story about the entire rally being an impulse. 5 waves here. Subsequent counter trend ABC as wave 2. Alright, and if this structure holds well, we should be looking towards another rally, a very strong rally materializing towards the north side. Could go towards the vicinity of 95 plus. Alright. So how do you deal with this chart, brothers? Maybe you could want to buy partial here around the current levels, the remaining around 92.60, 92.80, the stop loss. Maybe you can, if your risk appetite is slightly less, you might want to place a stop around 91.50, or an ideal one is to go just around the 91 mark. Take this as a swing trade rather than an extremely short-term setup. Another thing which I would like to highlight here is the MA series and the RSIs. This is one of the factors which you should consider and gives a lot of confidence to trade as well, is the bullish diverging scenario, and it is absolutely clear, unlike Euro USD, the dollar index is showing or highlighting a bullish divergence scenario here. Alright, so all these reasonings put together, dollar index, you should be considering to go long from here or a bit more lower. Euro USD, considering shorts, remain short actually, with a stop around 1860. And gold, selling on rallies still is a favorable trade strategy. Please remember, it's 23rd of November right now, and we are still a few sessions away. By the end of the next week, we will be approaching quite critical levels across the board, which should be forming major highs and lows. This is a very practical and handy way to deal with a fresh series, and you will be listening about this a lot many times from my side. All right, so that's the quick summary here. I'll be touching upon crude oil next session if possible. Please do write to this email address for any questions you have. We will normally be doing 2 live sessions, and then you can find those in the archives if you miss it, each day. That's the UK live and the New York live at 3 AM Eastern Standard and 8:30 AM Eastern Standard respectively. Alright, and you can also find me on Forex Lens. My friend Igor over there. Alright, to tune in in the live sessions. And during the weekends, maybe I'll be declaring earlier, 1 day earlier. I would like to do some discussions on the wave principles, the Elliott wave principles specifically. Maybe this week I'm planning to discuss about the fractal nature of the market. Alright. So once again, thank you for joining in online, friends, and I would like to hear from you if at all any questions or any suggestions, and you're welcome to join my Telegram channels for live trade setups and the updated situations there as well. Normally I do discuss them on the channel here as well, but if you want to be in touch on a live basis, kindly subscribe to the Telegram channel Japee. It's all my passion, giving up all complimentary right now, and I hope that you get benefit out of that. Alright, so next session lined up at 8:30 AM Eastern, New York live. I'll be there to see you there again. Until then, please take care and God bless, brothers. Goodbye.